Hey guys, this is your girl Paula, the queen from Queens. This is Wealth Wednesday. Today, we're talking about home buying and creating generational wealth through home ownership. I have a young lady here, Miss Trina Hayes. She's a senior loan officer. Hey Trina, how are you?
Paula,
How you doing?
I'm doing well, thank you.
So is now a good time to buy a home? I mean, considering with the home buying interest prices at this point and inventory being so low, is now a good time to buy?
What I share with clients, if you can afford to, you're in the position, everything else is lining up for you, it is no question in your best interest to go ahead and purchase. In addition, what we've seen, especially in our area, and Paula, I know you've experienced this in your market where you're located, sales prices are going up as opposed to going down. So if you want a chance, instead of buying now, you turn around and buy later, what's going to happen later? It's pretty likely that you're going to have to pay more for the same property that you were looking at this year, next year.
So there's so many different types of loans. Can we talk about some of those?
We've got conventional loans, typically requires 3, 5, 10, whatever percentage beyond that you'd like to put down. But it's a good basic loan, 30-year fixed, 15-year fixed. You can look at adjustable rate mortgages. Those are out there. Not as popular right now. You've got government loans. You've got VA loans, which are for our veterans. They've got to have a valid certificate of eligibility in order to obtain that type of loan. You've got FHA. FHA is a common first-time home buyer loan. It was my first-time home buyer loan. When I got my first loan, it was an FHA loan. You can get USDA. USDA is 100% financing. Your home has to be in a rural designated area, but 100% financing option is available to you. So, several different loans, jumbo loans, you name it.
So what are some of the steps in the home loan application or underwriting process?
The first thing that I tell people, you got to apply. First thing you're going to do is share with us your personal information. You're going to give me the basics: name, address, telephone number, social, date of birth, email addresses. I'm going to need to know, who do you work for? Name of your company. What's your position? How long have you been there? What's your salary? Then I'm going to want to know, what are your assets? Do you have little money in savings, but you've been on your job a long time and you've been very disciplined and you've got money in your retirement plan, your 401k. Those are always good, viable options for down payment. And we look at all of that. And then on my end, I go in and pull your credit. So you complete all of that through your application. I take a look at it. We have conversations and we determine what the next step is. Because I'm going to take my time and I'm going to look at that and we're going to discuss numbers, because we want to make sure you're very comfortable in going to the next step. We want to make sure that you understand what that payment's going to look like, how much money you're actually required to bring. Are you eligible to move forward at the moment? What if you're not? What do we do next? So before you get to that underwriting process, we're going to look at that pre-approval process going through with me to make sure that everything is okay and you're ready to move on to the next step.
I have another question for you from the
Yes.
audience. And the question is, Diana from New York. New York City, my hometown. How many years do you need to have at your current employment when applying for a home mortgage? Great question.
So that is a good question. What I'm going to share with you, what we document are the last 2 years of your employment. Will those 2 years have to be with the same employer? Absolutely not. It does not. But that's what we're documenting, your 2 most recent years from now back.
I have another question for you from Ms. Minnie Johnson. I have more than $20,000 in savings. I want to buy a home, but I don't know how to use the money I have wisely. How can I put that towards a home and wisely build equity?
What I'm going to suggest that you do is, first of all, get with a good lender. Let's make sure if you're looking at first time home buying that you're purchasing a home in your budget, that you're not overbuying, but that you're going to have enough money to take care of everything relating to that property acquisition. That's down payment, that's closing costs, moving expenses, inspections, appraisals, whatever is associated with that you are actually using that money towards that purchase. And maybe if you don't need it all and you can comfortably afford the payment without using it, then that can continue to be a part of your liquidity nest egg that you have out there. Hi, Morgan.
Hi. My question is, what if I'm not currently ready to buy? What are those next steps and how do I go about navigating that?
One of the first things that I would tell you to do, whether you decided to work with me or another lender in your market, whatever you decided to do, make sure you get with someone who's first of all going to be honest. They're going to review everything and they're going to talk to you and listen to you and share with you what the next steps need to be. It can be something as simple as, I've gone through the process, I've pulled your credit and you're just not ready. You're not ready. We need to look and see, why are you not ready? Are you not ready because, you've not been quite as disciplined with those credit cards as you need to be, or you simply just have not found the fine art of paying people? The range can be somewhat broad scope. So I tend to tell people this. Take some time, make sure you review and you sit down with that loan officer, because we're going to know. It's our job to get people ready to buy a home and assist them with home ownership. So it's in our vested interest to help you. Every client that I have is different. So you've got to have someone who's going to look at your particular situation and make recommendations that are going to help move you forward.
It's so interesting. If you look back historically for African Americans, the pathway for home ownership has been tough.
Yes, it has.
And still, culturally, ethnically, we're still not buying homes on a larger scale. We're still, whereas white Americans, 65% own homes, Hispanic Americans, 25 to 30% own homes, African Americans, 20 to 25% own homes. So this is a way to generationally build. And I remember very clearly during the Great Migration, when my parents came from the South up to the North, that it was challenges to buying homes. And my aunt, my dad's sister, the landowner allowed them to purchase the property, and it wasn't legal. And I have the document that I just received when she passed away, that he wrote a handwritten agreement to allow them to rent to own. So as they were paying down the house, he wrote an agreement and allowed them, because they worked for him. He took out small amounts of money each month to pay for the mortgage. And after a number of years, they did own the home. So there is a process, and you're right, there are a lot of scammers. And that's why I'm appreciating you, and you're being transparent, you're being honest, and you're not just throwing us into the process and we're getting lost amongst the wolves and being devoured in this process. Leader of the pack, is there a credit score that is acceptable to begin the home buying process?
The absolute minimum credit score that the majority of lenders can assist you with is going to be a 580. And again, credit scores in the mortgage business are different than when you go to the car lot and purchase a car, or you go to the bank and get a personal loan. In mortgage lending, we have what's called a tri-merge credit score. We have a credit report from all three of the credit score providers. We're going to throw out the highest score. We're going to throw out the lowest score. Whatever that middle number is becomes your qualifying credit score. So as long as your qualifying credit score is 580 or above, you then are eligible to purchase a home. Now, what type of loan are you eligible to get with that? An FHA or VA loan. You can't get a conventional loan with that. You can't get a USDA loan with that, and several other ones that are out there and available. But you can get an FHA loan or a VA loan with a 580 credit score.
And this is from Geneva Robinson. When the market goes down and the interest rates drop, is that a good time to refinance?
Absolutely. One cautionary tale with that though is you want to make sure you get to the point wherein there's enough spread in the current interest rate you have on your mortgage and what that new interest rate is going to be to make it beneficial to you. As soon as you start to see the market move, the first thing that you'll get are the lenders reaching out and everybody's ready to refinance you. You want to take time and make sure that that's floated down enough that you're going to benefit and that it's not going to turn around and drop right behind you after you've refinanced and you're feeling encouraged or feeling like you've got to do it again because you didn't wait enough time in order to get the maximum benefit of that refinance.
Trina, are there some takeaways that you want to leave?
I like to think of the do's and don'ts of lending. First thing being, if you know you're getting into the lending process where you're ready to purchase your first home, it's not an ideal time to go and open new credit accounts. Let's try and not change jobs during the loan process. Don't co-sign for others. That's a bad time. Let's not make any late payments, and for goodness sakes, don't lie on your loan application. If we start out and we find that things aren't in line according to what you said, then we've got to drop back and figure out how to fix that. Rebuild that trust. Do continue to save money. I've not met one client who saved too much money. They'll ask me often, how much do I need? I'll give them a figure. I said, but you need as much as you can save. So let's get on with saving. Keep credit card balances low. Be mindful of credit inquiries. That's not the time to shop your credit around with everything. Go to the car dealership and do too much. Just be mindful of it. Watch that closely. Stay within your budget on purchasing a home. If you know your maximum mortgage payment that you can comfortably pay is $2,000 a month, you may not want to be paying $2,500 a month if you know that's going to create a deficit in the cash flow in your home. Okay? Ask questions about anything during the process that you don't understand. We don't expect you to walk in knowing everything, so we want to make sure we can advise you as best we can, and we're the professionals here to answer any questions you may have.